welcome. You're watching Closing Trades on ET Now. I'm Anisha Jain, with me is Aisha Faridi, and for the market, it's another volatile day of trading session. Look at the range that we have really managed to scale throughout the trading session. It was 17,450 on the downside.
Anisha,
yes, we're not going to the 14,000.
Not 14,000. But yeah.
But 17,440 on the downside, and on the upside, almost that 17,600 mark is where we have been trading at. Having said that, a lot of sectoral moves today. We have obviously the weekly options expiry that's adding to the volatility in the markets, and that's keeping it choppy. But banks are in the spotlight on account of the volatility that we have seen in the Adani group of stocks, and that's quite a solid volatility that we're seeing there. ITC and Britannia are the two stocks which are bucking the trend today. So these counters have managed to stay in the green via a gain of 4 to 5%, and both of them actually sitting at record high levels. And that's what is pulling the Nifty FMCG higher. Meta earnings came overnight, and that is something which is boosting the sentiment for IT stocks. So KPIT Tech, since the earnings have been on an uptrend, and Persistent too has been doing well. All eyes now are on the ECB and BOE decision, wherein we are expecting a 50 basis point hike. There was a bit of a positive reaction yesterday with the Fed outcome being on expected lines. Let's see whether the European markets follow suit today.
You can't take your eyes off from the Adani group of names, can you? And, you know, that volatility pretty much mirrors what's happening with the rest of the market. On last check right now, Adani Enterprises is lower by about 21%. Started off with a gap up of 10%. Fell 5%, recovered again, and now pretty much hovering around the session lows, down about 22% on the spot market. Birlasoft, Jindal Steel, UPL, Jubilant Foodworks after its earnings. These are some of the other laggards in trade. But on the flip side, IDFC First, ITC, which has made a very big move today, 4.5% higher. Ambuja, Canfin Homes are some of the other big winners. But Kunal, what about the index?
I think it's been a good recovery, I would say, because, you know, the morning take was around 150 points on the downside. We were almost back again on the verge of breaking below that 17,500 on the spot, 400, 450 on the spot. So I think we managed to recover quite well for the Nifty Bank Nifty. And I think, yes, the markets would remain under under some sentimental pressure. But the only positive part which I've seen for the markets, at least in the last 3-4 days comparatively, is that the market breadth is improving. The number of stocks which are trading below their 20 DMAs, 50 DMAs, and 200 DMAs respectively, the number of stocks in the mid caps, small caps, that's reducing, and that generally is a positive sign, because when stocks see an internal recovery, the market breadth sees a recovery. That's the first sign that the markets are nearing a major bottom in place. So I would not be very bearish on the indices. I think dips like what we saw in the morning today, 150 points on the gap down on the Nifty, should be taken as an opportunity to buy.
I have a simple question. The market sell-off has only intensified after the Adani group of stocks, they started falling. Now Adani group of stocks are falling as if it's like a bottomless pit. They're just falling, and they could fall more. So if I have to do a very quick trend analysis, can I say the market bottom will only happen when Adani group of stocks, they stop falling?
So we can say that, and I would take a bet that what we are seeing is a bottoming out formation in the whole Adani stock. Now look at the three major names. The first one, Adani Enterprises, the stock used to be 1400 to 1700 in 2021. And that is the price point from where the rally started. We've made a low at 1500 and seen a little bit of a bounce back here. So that's the first indication possibly a bottom is done in Adani Enterprises. Then if you look at Adani Ports, the stock used to be 425 to 450 pre-COVID levels. We've gone and touched those levels today in the morning as well as during the day multiple times. So that's the second one. The third one is Ambuja Cements. The stock was at 280 to 315 in the Russia-Ukraine conflict when the takeover was also not there for the stock. And the stock has made a bottom at 315 levels. So I think majority of the pain is over for all these names. Will they make a sharp bounce back? Difficult to say, but that indicates the sentimental impact which was overhang for the market seems to be over today.
Sunil Subramaniam, still in the thick of earnings. That is also one factor the market is cognizant of. So let me welcome on board Pirojsha Godrej, Executive Chairman at Godrej Properties, and talk about their numbers. Pirojsha, great to have you on ET Now. Just going through your numbers, and your average realizations have come down. Probably, I guess, it was the change in product mix. Will this be, though, an ongoing occurrence moving forward as well?
Great to be with you. I think we're actually very happy with the quarter gone by from a sales perspective. We've notched our highest ever booking value number of just over 3,250 crore for the quarter. As you rightly guessed, I think the average sales price is really a function of the product mix. We had a large percentage of our sales come in from Ahmedabad this quarter, which is at a typically lower price point market, and I think that's the effect you've noticed. I think for the full year, though, we should see realizations go up year on year. We're certainly seeing at the project level that taking place on a consistent level.
Okay, so that was about the entire sales momentum as well as the average realizations. But one thing that really grabbed my attention in the earnings this time around is the big surge that we have seen in the debt as well. We'll come to that, but let me first talk about the pre-sales figure as well. Because for FY23, you had given a pre-sales guidance of 10,000 crore. Are you on track to meet that? And what could be this number in FY24?
Yes, I think we've done about 82% of the full year guidance we'd given by the end of the third quarter. So we're quite optimistic of going well past the 10,000 crore annual booking guidance we'd given. I think exactly what the number will be will, of course, depend on the number of launches that happen and how they're received. But I think we're quite confident that this year will beat initial expectations. I think for our FY24, we typically wait until the end of the financial year before we give guidance. But on a broad level, I can say that the opportunity for the company is to grow on a compounded basis by at least 20% a year over these next few years. So hopefully that is something we can deliver next year as well.
Significant, Roshas, there is a significant increase in quarter-on-quarter debt at 2,500 crore versus 1,300 crore. What has led to that?
When we'd raised some equity a couple of years ago, the entire intent of doing that was to be able to quite aggressively invest into new opportunities, given the kind of growth we think the sector will see over the coming years. And I think this past quarter has probably been our best ever quarter for business development. We added 9 new projects. The future booking value we hope to or expect to get from these projects is about 23,000 crore. So a lot of the investment for that has happened during the quarter, which is why debt has gone up. If you look at our overall debt, it's still very moderate levels. As you said, it's about 2,500 crore of net debt. Our gearing ratio currently is just under 0.3:1. We've actually guided that we would like to operate with a gearing ratio of anywhere from 0.5:1 to 1:1, as we think that is the level that sort of best balances the opportunity and making sure we're going after the kind of growth opportunity the market presents, but also doing it in a prudent manner. So I would say we are still in investment mode and would expect that debt number to inch up as we make new investments over the coming year.
So what's the debt level you're comfortable with, and what's the maximum level you think you're going to hit on an absolute basis?
Well, our net worth today is just under 9,000 crore, and I mentioned a 0.5 to 1:1 gearing ratio. So I think that would imply anywhere between 4,500 crore to 8,000-9,000 crore of net debt is where the company would be happy operating. Of course, I don't think we would go to the higher end of that range very quickly. But certainly I think that we think currently the company's balance sheet, if anything, is under leveraged. So we will look for opportunities for new investment, and we're very happy with the recent traction we've seen on that front in the third quarter.
Okay, Pirojsha, we'll let you go on that note. Appreciate you joining us on the show. So overall, decent quarter coming in. The debt has gone up, but the management is pointing out that the balance sheet is still quite comfortable. Let me go across to Sunil Subramaniam now. He's been standing by. Sunil, thank you so much for waiting by patiently. What's happening at the market at the moment? There is no positivity at all. There's no buying interest. And despite a lot of negatives being out of the system, the market is just failing to go up.
So I wouldn't agree that there is no buying interest. I think there's a lot more selling interest as opposed to the buying interest. So if there was no buying interest post the budget announcement yesterday, immediately the market wouldn't have risen up so sharply. So I think domestic investors remain bullish. They are willing to buy. The issue is that FIs have been selling heavily, probably because of the Adani related stuff. But domestic investors can only buy if they sell something else. Remember, the mutual funds and insurance companies don't keep too much of liquid cash to go and buy. So they are fairly reasonably well deployed. So if you take it a delta, it's only 5% of the mutual fund corpus which is available to buy, and I think a lot of that got deployed when the initial budget announcements came, and the budget was received very positively by the entire mutual fund and the corporate sector. So they went in and bought. But because of the news around the Adani pack, in terms of the uncertainty, they're calling off the FPO. FIIs naturally panicked, those who had significant allocations, and there also the related impact of banking exposure to that pack. So I think that when they then came and started selling, see, for them to sell, it's easy because you sell from your existing book. To buy, either you have cash and buy, or you sell something else to buy. And given the way the budget was a all-round budget, right? It was a very hard decision to say the budget was negative, so I sell this sector and raise cash and buy something else. So the reason is that the Indian market today is almost fully deployed, and there is a positivity as fresh inflows come into mutual funds from investors that will continue to be buying. But I think for FIs to turn the tide, right, they need clarity around what's going to happen with the overall Adani pack as a whole. As you know, it's not just one sector. They have companies spread across multiple sectors. So that, and also the fact that if you take an ETF, let us say there's some heavy investor in an ETF, and because of the Adani view, he's taking a slightly negative view on India. So when he withdraws money from the ETF, all the stocks in the passive index will get sold. It's not only the Adani pack. So there are specific hedge funds, maybe who have specific exposure to those which were selling, but a broad level passive outflows, if they face on India ETFs, that will mean selling across the board. So it's a combination of that. I think this is a temporary phase till the uncertainty gets resolved around this, and you will see the markets bounce back in the next few days.
AMC, do you have any exposure to Adani group of stocks in the debt or also in the equity schemes?
I'm not allowed to talk specific, but I can tell you that we don't have any exposure on the debt side. On the equity, we have some, but that's like I said, I can't specifically take stock, but it's probably the lowest in the industry in terms of exposure there.
Trying to understand. So I'm not getting into stock specific discussion. Now, there is a fear that if something happens to a large corporate group, the collateral damage could extend to lenders, whether it is banks or whether it is a company or entities which have given loan to Adani group of companies. Banks have come out in the defense, have said, look, we have no problems. We don't lend against stocks, we lend against assets, and asset prices have not come down. So do you think this fear that if there is a problem in Adani group and the snowball effect of that could hit lenders and it could start impacting their books is slightly far-fetched?
It's absolutely far-fetched because most of the Indian banks lending is to project cash flows. So whether it's a cement company or it's a port company or it's a electricity supply company to Bombay, it's on the cash flows of the project, and they are very ring-fenced from this. Now, if the promoters have pledged certain of the securities and borrowed against them, those are largely maybe a few NBFCs or maybe overseas, right? That will impact the stock prices because there's margin selling. But the cash flows of the group against which the banks have lent, I think those cash flows these are all existing servicing companies, right? So I don't see that. I do agree with you that any systemic impact on the Indian banking sector because of this, I think, is far-fetched.
Stay with us, lots more to talk about. For now, it seems like the recovery is holding, or maybe I'm talking too soon because we've already completely flattened out, at least on the futures. 17,765 is where we're currently at. Adani Enterprises on futures down now 22%. We'll take a very quick break, come right back, but also hear it out from market veteran Vallabh Bhanchali as to what he made of the budget and, of course, the current market environment.
बड़े बड़े देश में छोटी छोटी बातें तो कुछ कुछ होती रहेगी. So except for those three balance sheets remain intact. I think the kind of dividends that will come out of banks is going to be staggering. Both to the government and private sector. So bank after bank is not talking of any significant credit cost, and we have seen the expansion of names in many banks. So even if on a larger base, some of these things get corrected, still there will be very, very healthy profits. So with government spending all of this with a reduced fiscal deficit, that is the most important thing. Therefore, any shortfall that could arise from any of these balance sheet stresses, if at all, is not going to be there.
Mr. Bansali, on behalf of everyone from DT thank you so very much for joining us on the budget day and really walking our viewers through as to what your thoughts are. I must say, Mr. Bansali, over the years I've known you, for the first time I've seen you explaining a point by using a Bollywood terminology. बड़े-बड़े शहरों में छोटी-छोटी बातें होती रहती हैं. So that's the first one from Vallabh Bansali. You have ITC, a stock which was considered to be the ugly duckling exactly a year ago. Always victimized in and around budget with additional taxes. A day after budget, ITC has just cut loose and has made a new high. Britannia also is making a new high. IT stocks are making a comeback. Asian Paints has stopped falling. Our market's going back to companies which in the near term, because what's happening to Adani group of stocks, our market's right now sidestepping all the capex or companies which in a sense have a lot of debt on them. So lenders, which is banks and financial institutions, they are on a back seat. Companies which have a high debt on their balance sheet, because what's happening in Adani group of companies, suddenly they have gone to, they are on the butcher block. But companies which have no debt, strong cash flow, decent near-term visibility, even though they're expensive, they are making a comeback. Sunil, you'll agree with me that in markets there are always cycles. Last year, if you bought into growth stocks, you've not made money. If you bought into growth stocks immediately after COVID, you really hit a home run. Are we going through that phase of the market where 1 year of value outperformance, which is what we saw in 2022 when stocks like NTPC, Coal India, they made a comeback. Now it's turned for quality stocks to make a comeback?
Not necessarily, I fully agree there. I think that the growth momentum in the budget has not got respect from the market yet. And the fact that the safety-oriented stocks like the ITCs and the IT sectors are getting money is just that the India positivity is coming through, so the allocation there. But if you recollect, right, IT has been a sector which has been under pressure. So the valuations there look reasonable, so they are a good buy. But the developing field for the market is of a rebound of growth in India, because most of the budget related growth impetus is still not dependent on international situation. Internationally, there is going to be a slowdown, but India is going to be a growth economy. And so from that point of view, I don't think that growth not getting a respect right now in today's market is going to be a very long lasting phenomenon. This temporary reallocation into safety, yes, means, look, I'm bullish on India, I want to park it. I don't want to increase that risk today. But as you see the developing numbers, and of course, quarterly earnings guidances are also important. How this summer consumer story plays out is important. How the private sector supports the government in the capex is important. So as these things come out, I would say that these high risk, high operating and financially leveraged sections, right, will bounce back. So I think that the correction that's happened over the last few weeks in these kind of spaces are good buying opportunities. Just got to be patient, because of the event surrounding the Adani Pact has meant a risk-off situation. Hence, they are not getting the due reward for the future earnings growth. But I would say it's a temporary phenomenon. It will last for a few days maybe. But our clear focus is India is a growth economy. Growth will get that respect and growth will deliver that capital appreciation to you.
We leave it at that. In fact, stay with us, Sunil. Lots more to talk about with you with regards to the current market. We spoke with Neelkan Mishra from Credit Suisse earlier today, and he believes that the budget this year has not been a growth-oriented budget. Let's hear out what his opinion is.
I would disagree that this is a growth-oriented budget, in the sense that if you are bringing down your fiscal deficit from 6.4% to 5.9%, you're actually reducing the support that the government provides to the economy. And it is a very timely support, meaning that as the economy then starts to come back on its feet, then the support that the government needs to provide is less. Now, where the government has shown I think, positive intent is the quality of the expenditure. So there is a lot of savings in FY24, which is expected on food subsidy, fertilizer subsidy, the NREGA payout. So as a job market normalizes, the demand for NREGA work comes off, and therefore the allocations to NREGA come off. The anticipated increase in PM Kisan payouts also did not happen. So as this occurs, there is some fiscal space that opens up, and that space has been filled up with very encouraging spending on capital expenditure. So this is the medium-term growth impact of this is going to be positive. I don't think in aggregate terms this would actually stoke inflation. This, in a way, if you think about 6.4 coming to 5.9 and hopefully 5.4 and 4.5, the government's support to the economy is coming off. So this is actually, in a way, slowing down the economy if you were to see it in isolation. So the inflationary pressures from this, I think, are extremely unlikely. This is the key takeaway for me from the budget, that the government has preferred stability over near-term growth, right?
Okay, I think numbers of Titan just flashing for you on the screen. The profitability has come in at 951 crore, 100 crore lower than what we were expecting. The number that we were pegging was close to 1,041 crore. So let's see if there's any initial reaction. Yes, the stock is taking it a bit negatively. Let's see what the internals are with respect to revenue as well as operational, efficiency. Because for now we have just one number flashing for you, 950 crores as far as profitability is concerned. While we get those details, Sunil, let me ask you about the entire FMCG pack. We just spoke about ITC, for instance, but you also have Britannia, which is doing well, and numbers from Titan are also just trickling in. And these stocks were not really favored in the last 6 to 8 months. Is there a case to be made to look at these defensives now?
It's just a case of mean reversion. See, again, I just replied to Nikoj in a very similar breadth, which covered this pack also, which is that they were beaten down. But today, when they are coming back, it means that India is still favorable. But because of the events surrounding the Adani pack and the uncertainty, they are preferring to put it into safer India. And so, since they didn't run up so much, there is a room for their valuations to expand, number one. Number two, the budget, to the extent that it was putting money in the hands of the middle class, to the extent that it's going to spend in rural with the increased agri lending and all the support to tourism and MSMEs, is going to also put some money in the rural economy's hands. So that's obviously a positive for consumption. And so these companies in the consumption space which are going to get a little bit of an increase in their top line, and with commodities generally at an easing level, these should benefit with a wider margins, are getting a little bit of an uptick. But I think that this is a temporary parking of the India-oriented money in the safety pack. I think over a period of the next few weeks and months, and as results come through, you will find that the growth which is not getting the reward today will get it, and there will be a relocation from here. So I would say this is a little bit of a mean reversion trade at this point in time, but it indicates a very strong positive outlook on India from FIIs to the extent they are buying these sectors.
To add a few more details with respect to the numbers coming in for Titan. The profitability was lower than expected, and that's because the top line is also lower. We were working with a number of around 10,950 thereabouts. The actual total income is around 10,650. Similarly, the margin profile is also weaker. At least on a year-on-year basis, there's a decline of almost 200 basis points as far as EBIT margin is concerned, and that number too is lower than expectation. The margin has come in at 11.7%. We were working with a number of 13.6%, so there's a disappointment to the tune of almost 200 basis points when it comes to the margin profile as well. However, having said that, the commentary from the management is quite bullish. You have Mr. C.K. Venkatraman talking about how there has been a double-digit growth of 12% on a strong base. They say that they continue to pursue their market share growth and are actively investing in capabilities as well, and the international endeavor is something which is also doing well for them, and a lot of new launches is what they talk about, whether it comes to their watches segment and the eye care segment as well. And on the jewelry, they talk about the store additions that they have done. A total of 22 stores were added during the quarter, and the total count now stands at around 510 crores. So that's the scorecard for you. The profitability is below expectation. Margins too have missed the estimates, and you have the revenue which is in line. We'll get Winnie to join us shortly, but before that, Kunala, take as far as the chart is concerned, Titan.
I think the stock has already fallen, very sharply in the last, I think, 1 month. January start, the stock was almost at 2650, 2600 levels. It's already below the 2300 mark, which means the stock had already anticipated this kind of a event to pan out. I would probably believe that if the stock dips, say closer to 2200, 2100 mark, that could be a good opportunity to go contra on Titan. So I would be looking to buy on dips, specifically below the 2200 mark for the stock.
Yeah, I'll tell you what's holding on today. It's IDFC First Bank. Now you know that which way the ownership of IDFC First Bank and IDFC Limited will open. IDFC, of course, has given this one-time big fat dividend, 6% higher for that one. RBL Bank is the other one which is caught catching my attention. Not the numbers were great, but this one stock where you know that the balance sheet challenges, the management change after the RBI diktat is something which had damaged the rhythm, so to speak. But interestingly, on a day when SBI is flat, Bank of Baroda has recovered. Yeah, it has recovered actually. Let's look at the intraday graph. When I last checked, it was down 2-3%. There you go. From the day's low, it's a very sharpish kind of a recovery. Duresh, have PSU banks corrected enough that they warrant a revisit? Because this is a bull market group. In a bull market also corrections would be there. They would be very savage. Have they corrected enough and are they back on track? Duresh?
Yeah, I would say so, because if you look at a Bank of Baroda from a high of 195, 200 corrected all the way down to 150, 160, that's a good enough correction. And the stock is back to the retest of the prices back in where it really saw that big gap up move in November. So out here, Bank of Baroda looks interesting. Same is the case with Canara Bank, which has also seen a good correction. It's corrected from 340 levels to 270, 275. SBI itself has corrected from 620 to 520. So overall, a 15 to 20% correction done. And the PSU banks look interesting at these prices, could make a slow and steady comeback.
Glad that you could take time out and join in the show today. We'll let you go on that note. But Titan, that's the earnings which are out. So let me take it across to Vinny, find out what's the scorecard looking like, Vinny.
So seems like not that great a set of numbers that is coming in from Titan this time around. Profits are below expectations, margins are below expectations of the ET output, while in terms of the revenue that seems to be come in line with the expectations. Now let me just take you all through in terms of the numbers that have come in for the company. What we're looking at in terms of the standalone basis, yes, we're seeing the revenues about the 10,000, around the 10,800 crore mark, while last year they were around 951. Yes, so we are seeing 9,515 crores, which is an uptick that we're seeing coming in on a year-on-year basis. But profits, that's where the pressure point is, and margin is where we are seeing the pressure coming in. Jewelry business, they have registered around 11% growth coming in for the company. Consumer demand had been quite strong in the jewelry segment, which accounts to around 80% of the business. So yes, the growth part is coming in also from the jewelry segment that we've seen coming in. And in terms of the watches wearable segment, they are highlighting that they've seen a robust growth coming in. We'll have to watch out and actually see in terms of, what more are they saying in terms of the margins, because yes, margins surely have been under pressure, and that is a factor that we're keeping an eye on, because it seems like there's an adverse mix which is impacting the margins of the company.
That miss on the margin is not going down well with this trade. The stock has seen a cut of over 2.5% in the last few minutes itself, since the numbers have been out because of the operational miss coming in. We'll do one thing, we'll take a short break on the note. When we come back, we'll track the last 30 minutes of trading session.
But the top traded counter in terms of the transaction, the value of transaction is actually Adani Enterprises. Why am I saying this is because today it has traded much more than ITC, it has traded much more than ICICI Bank and much more than Reliance Industries. And Kunal, now one side we are saying that this is a stock which institutional investors don't own, retail investors are always out. This is not a trending stock. But a stock today in terms of transaction value, rupees crore, on National Stock Exchange has traded 5 times more than that of ITC and 6 times more than that of Reliance. How is that possible? That means there are a lot of intraday trade happening here.
Yeah, there are a lot of intraday trades which happen. Again, I think it's more to do with cash as well as F&O, and stocks which generally are in F&O. They and which sees these kind of trend and sharp selling, they tend to have more intraday trading activity, because then getting in getting out in terms of options, futures as well as cash, these three segments, having a combination of these three segments as a strategy building as well, I think is something which traders look out for. So that's I think one of the reasons why I believe that the volumes are also pretty much high.
Sandeep Sabharwal, good afternoon. I thought we had a deal that post-budget you will come to studio in the afternoon shows. You'll climb the wall and make it on time for the closing show. That's what I remember.
I think you talked to too many people on that day, so you got confused who was saying what.
What explains this extraordinary volume surge in Adani? I mean, I can understand that the stock is down, but it's a stock which retail investors hardly own. It's a stock institutional investors, whoever owned, they've decided to throw away. But the stock today in the cash market, NSE cash market as we speak, has traded 6-7 times more than the volume of Reliance. Why is there so much of volume built up there?
So I think volumes keep on happening in such stocks because of arbitrage, etc. also. And so I think that's not so important, but it's very well owned among retail investors, the entire Adani group, because I know that I get so many portfolios people send me to see. Like everyone has their own share of Adani stocks in their portfolios. And to that extent, but it's not enough to create the kind of panic which is there. So, which is, I think, largely driven by what's happening to their global bonds, because as per what I was reading in the morning, like the bond yields of some of their bonds have gone up to as high as 30%. Now, 30% is effectively a default kind of bond yield. That would normally not happen. So why that has happened? Because most of the banks in India are saying that the repayments are on schedule and it's well covered. So I don't really know what's happening out here.
Continue to be in focus, and that's really keeping Vinny very busy. You have the numbers coming in from Dabur as well, and it looks like a tad bit of miss because the volumes have declined by 3%, while the revenue is in line. There is a beat on the margin front, and profitability is a bit tepid too. Vinny, there are a whole host of earnings you're watching out for. Titan is through, Dabur just came through, and we also have ITC tomorrow coming in. Give us a sense about ITC and Dabur numbers too.
Okay, first let me just start with numbers that have just come in. Dabur numbers, when you look at it, margins a slight bit coming in on that front. Profits and the revenues are actually in line with estimates. But volume growth, like you mentioned, volume growth has seen a 3% decline this time around coming in. We were expecting a 1% decline in terms of the volume growth of the company. Now, in terms of overall the net profit of the company, also that's seen a decline of around 5.5%. While when you look at it, overall revenues have seen a growth of around 3% as well coming in over there. So all in all, the management has also highlighted one thing, that there is a bit of down trading that they've seen coming in terms of affordable packages as well as LUPs, which is leading to the negative impact and leading to negative volume growth for the company as well. So keep an eye out on Dabur. As of now, you can see the stock is also down 1.5% in trade. But Anisha, like you mentioned about ITC also, in terms of the numbers, ITC today, on the other hand, is among the top gainers in the Nifty 50 as well, and trading at its all-time high levels. In terms of numbers, what we're expecting, 6% uptick in terms of revenue, cigarette volumes around 8 to 9%. Hotels is expected to do well for the company. Paper business is also expected to see a strong growth coming in, while we'll keep an eye out on how the agriculture business is done, as well as the commodity pricing in the international business is a factor that we are keeping an eye out on. Let's watch out for the margins of the company. We're expecting a bit of an expansion coming in terms of margins for ITC. I beg your pardon this time.
Well, yes, given the fact that you're so busy with a whole host of companies, that mistake is quite acceptable. In fact, for Britannia as well, they have pointed out that the revenue growth is expected to remain around 15% in the coming years, and that's the reason that stock has been supported with an uptick of around 5%, while for Jubilant, there has been a bit of a miss, and that stock continues to reel under pressure. Well, let's take a look at some of the other counters in other spaces as well. You have Welspun India, which is up around 8%. Clean Science, that just reported its numbers, is up 7%. KPIT Tech continues to do quite well for itself, 6% higher today as well. And then Vedant Fashions, Blue Star are some of the other counters. Blue Star, of course, sitting at record high level yet again. Naresh, IT has been too in focus now, and it's managed to buck the trend today as well. You have the mid-cap IT doing quite well. What would be the top bets from the IT pack?
So from the IT pack, a lot of the large caps have already done well. The smaller names could see a bounce back, so which is where LTTS, LTI, Mindtree, and all these three names out of them and say going forward, Tech Mahindra seems to be making a bottoming out case out here, and HCL Tech remains a buy on major dips. So the whole gamut looks interesting. The reason is if we look at the global markets, Nasdaq is at a 3-4 month high. That indicates the shift in momentum across the IT names. We've seen a lot of correlation. So out here, one could go a little gutsy and go towards small cap IT names that could bounce back sharp.
See, that of course is seeing the biggest move today, Britannia and then Unilever as well. It's really all about FMCG, isn't it? Infosys as well, holding out 2.25%. And look at IndusInd Bank, especially the intraday chart on this one, because it's been quite jagged. About half an hour or an hour back or so, the stock completely flattened out, and then again it's seeing a spike up, and it's climbed up all the way to the session highs. 1075 is where IndusInd Bank is currently in trade. Kunal, what is it that you're making of this very intriguing pattern on IndusInd Bank? Sudden spike.
Yeah, good spike, but I think the stock is now trying to establish a base at this 1050 odd mark. Now, in the last 3 days, the stock has formed a relative lower low for itself. So I think 3 days back, the low for IndusInd Bank was around 1075. Yesterday, the stock made a low which was sub 1000 levels. And on both the occasions, the indicators have actually made a higher low. That generally happens when the stock forms or gets near to forming a major base for itself. So possibly in the next 1 or 2 weeks, we can see a much more steady recovery for IndusInd Bank from here on.
Okay. I'm scanning through the list of stocks which are at a 52-week low versus list of stocks which are at a 52-week high. And the number of stocks in the broader market, market cap cut off about $500 million. Number of stocks at a 52-week low is far higher than number of stocks at a 52-week high. So that just tells you that which way the market breadth per se is now getting exposed. I mean, number of stocks hitting low is much higher. Sandeep, the casualty, if you frankly ask me, from this year's budget is the insurance sector. Government wants to move to a new tax regime, take out whatever is giving you exemption, and insurance has been a big industry which in a sense has given tax benefits for years now. In the light of what has come in the budget, how do you see life insurance companies moving now?
I think there'll be a definite hit. Now, most of the companies have come out and said that the hit on them might be marginal, but I don't think so, because as per some of the insurance brokers, etc., have talked of, so they were quite negative on this move, because a lot of money in high value gets deployed in insurance for obvious taxation benefit purposes. So growth could slow down in the near term, and that's what is getting reflected in the stock prices. Now, it's not a sector which will completely go out. So I think once these stock prices adjust to the new normal, at that time, they will be again worth looking at.
Okay. Just looking at a couple of other movers, while of course Adani Enterprises is now headed in for almost a 28% decline on the futures. Adani Ports is down 7%. So these group of stocks haven't seen any respite, barring that initial knee-jerk reaction that you had when the markets did open. The breadth is mildly in favor of the advances. There's of course UPL, there's Whirlpool, Birlasoft, all these names are under pressure, and it's actually some of the infrastructure names led again by the Adani group of stocks. They are the ones which are weighing heavy. Concord is the other one. It's not a huge drag, definitely nothing compared to what the Adani group of names are seeing, but that, GMR Infra, they as well are pretty sideways, as is the case with IRCTC as well. But let's take some BTST trades as we get closer to the market close. Kunal, what's on the list?
So I'll suggest a couple of buy calls, and the first one is a buy on Voltas. That stock is forming a triple divergence on the hourly charts. So would suggest a buy with 880 as a target, stop loss at 780. And Atul Auto is one of the stocks from the mid-cap space. In fact, most of the auto-ang stocks are showing some very good price action today. So that's a stock closer to 340 levels, where I would look to bet on targets of 366, stop loss at 326.
Naresh, what about your BTST trades?
So first would be a buy on HDFC Bank. The stock has corrected today almost 1.5%, 2%. 1580, 1600 is a strong support level. So expecting a bounce back here tomorrow to 1640 levels, stop loss at 1590. Second is a buy on Ashok Leyland, which is on verge of a breakout above 150 to 153 levels. Good volumes today. A stop loss at 150 and a target price of 160.
it's turning out to be a good day of trade for FMCG stocks. I mean, I've been in that phase of the market where, Sandeep, let's look at the market positioning. 1 year ago, high growth stocks were getting extremely richly valued. Same time last year, Zomato, Nykaa, Policy Bazaar, they were on a different plateau, so to speak. That trade has reversed completely. Then high leverage companies made a comeback. Whether it was Adani group of companies or infrastructure companies or real estate companies, that trade has corrected now. IT has already corrected. So with the FMCG stocks are expensive. Now with the exception of banks, which is a proxy on economy, I wonder that where is leadership in the market? Banks will do well if economy does well. But turn by turn, every sector is getting challenged.
Yeah, but then there is leadership. You look at the auto stocks, you look at something like a M&M, which is at an all-time high almost. You look at Tata Motors, which can potentially come back, good numbers coming from Maruti. So I think this entire, even Ashok Leyland delivered good numbers. So this four-wheeler space looks, I think, decently placed. On the infrastructure side, like the proxy, whatever is correcting, we don't know. But you look at L&T, it's doing reasonably well. It's just off 3, 4, 5% from the tops. And many other capital good companies will also do reasonably. So I think, and financials, I believe, will come back after this wave of correction. So I think that's where the leadership will lie. On the consumer side, durables, non-durables, selective companies will keep on doing well. Selective stories out of defense, etc., will keep on doing well. Something you look at last 2-3 days, the results of Indian hotels and Britannia were exceptional. So I think many of these companies which are giving exceptional results, which adjust for their valuations for a much higher stock price in the future, they could still do well.
Take coming in, but on the losing side, apart from Adani group of companies that we have been flagging out, and the cuts are just deepening that. In fact, for Adani group of stocks, let's try and look at the range that we have seen intraday, because there is almost a 30 percentage point move that we have seen. It was up 10% at one point of time. It now fell 20-30%. So there has been a big range as far as the Adani group of stocks is concerned. And Adani Enterprises, for instance, is now 60% off its life high levels. Plus the other Adani group of companies like Adani Port is 54% off the highest point from the life highs as well. And Ambuja Cement too is 43% off the life highs. And intraday as well, we have seen volatility anywhere between 20 to 40% on all of these counters. Separately, you have UPL too, which is under pressure. The street is worried perhaps that this entire Adani bond issue might have a ripple effect on the cost of borrowing for a lot of global facing companies as well, and the companies that have exposure in foreign currency. We spoke with the management of UPL earlier. They tried to allay these concerns, but for now the stock is down 6%. Let's play that bite of the management where they are saying that they are quite confident about their exposure when it comes to the foreign debt as well. They said that they're looking at deleveraging perhaps to the tune of around $500 million in the coming quarter, because this time around as well, the overall earnings were decent, but the stock is just down in the trading session. Naresh, any word on UPL? Where is that expected to settle?
So the stock has gone sideways for the last year and a half. It goes to 650 to 680 levels and bounces back to 800. But overall has been around that 700 mark all through the last 1 year, if the average, if you were to look at it. So for now, it is basically trendless. It has broken the recent lows of 710 levels. So I would expect 670 to be a base for the stock, and again 770 to be the upper range. So actually very difficult to trade this one when the trends are not picking up. The stock has not been able to make that breakout or a breakdown move. And we are right now in the middle of the possible trading range. So for now, it's an avoid as a fresh trade.
The trading range, just wanted to flag out. Okay, so before I flag out any other stocks, let me go across to the management of UPL.
We are completely covered. Our bonds come due over time, and we've been very thoughtful in terms of how we've stepped that out in time. In fact, we're very pleased with the cash generation that we're expecting to deliver this year. We're on the strength of our operating performance. We're expecting to generate enough cash where we can pay down around $500 million of net debt this year, and so. If you think about our operating leverage post the pay down in debt, we'll be in the range of about 1.4 net debt to EBITDA. So, yeah, very healthy balance sheet, strong cash generation. And so, we're set up well, even in spite of the fact that obviously interest rates have climbed. But as we think about going forward and paying down debt, that'll put us in a good position. We have a mix of debt positions, including we have some sustainable bonds that we recently had issued based on what we do from a supply chain standpoint and the sustainability objectives in our business. And so we don't break down the debt, by the origin. If you look at our disclosures, we show our gross debt and our net debt, and so and obviously our interest payments. And so you can see from that our cash generation is very strong, and we can easily cover the interest rates, and on top of that, pay down debt as we go forward.
Okay, that's the word coming in from the UPL management. Stock, of course, still lower, hasn't seen any respite, still down about almost 6% as we speak. In fact, let's begin winding up for the day as well and get in some trends going. Kunal, FMCG clearly seems to be the one pack holding out. ITC, Britannia, Unilever. Can still go long on any of these names?
Yeah, I think ITC, even at current levels, I would be bullish on. I think 400 should be a very convincing and a possible target for ITC. Maybe not immediately, but I think over the next couple of months, yes.
Okay, that's the take coming in on ITC. On that note, ITC is indeed going as the biggest winner within the Nifty, while the Nifty, of course, is closing in flat, but that's really not giving you the true picture for the day. Britannia holds out nearly 5%, Innocent Bank with a 3.5% gain, and then Unilever as well, which managed to hold out 2.5% today. Infosys as well had a decent day, 2.25% higher for Infi. There's Wipro, HCL Technologies and TCS as well, giving it due company. Actually, private banks also did not do all that bad. So there was Axis, Kotak, ICICI Bank. They all held out smartly. SBI as well towards close managed a firm close for itself. But yes, pressure from Adani Enterprises, pressure from Adani Ports, Tata Steel, HDFC Bank, HDFC Life, 11% down yesterday, 4.25% down today. Asian Paints, Hindalco, Nestle, Sun Pharma, even Reliance closing in with a 0.5% downtick for itself. The breadth as well has been pretty even, Stephen, you'd have to say, although a slim margin in favor of the winners when it came at least to the F&O universe. Ambuja Cement was the one stock which was fairly resilient amidst the other Adani Group names, so 7.5% higher there. There was IDFC closing in with a 6% gain. Canfin Homes higher by about 6%. IDFC First up 6%, and then RBL Bank as well, which managed to gain ground by about almost 5.5% odd in today's trading session. Naresh, before we wind up, the Nifty call. Okay, Kunal, you then. The Nifty call for tomorrow.
Well, I would continue to be bullish on the indices, and I think if we open with a similar kind of a gap down opening, like 140-50 point downtick on the SGX, I think that should be taken as a good opportunity to buy. So today we initiated a buy on the index. We managed to square off. I think tomorrow also, if we manage to see some kind of a downward tick, would initiate a buy again on the index.
Okay, on that note, let's wind it up then on this edition of Closing Trades from Anisha, me and the entire team that put the show together. Thanks very much for watching.